What's good, YouTube? It's your boy CJ, and I am back with another trading video. I know it's been a very long time since I've been on here making videos, and I told y'all I was going to be consistent before, and I didn't do it. I didn't do it. But a lot of people been in my DMs just asking me, like, why did I stop making videos, or like if I could teach them and things like that. So this is going to be my way of like showing y'all how to trade. And I'm gonna do the best that I can for y'all. Okay, like I'm gonna actually slow things down too, because a lot of people say that I talk way too fast or I teach way too fast. So we're gonna take steps back. You know what I'm saying? We're gonna re what's the word? We're gonna just come back to the foundation of the style I trade, okay? And I'm gonna break it down for you guys so that like a 3 year old can understand it. I mean, maybe not a 3 year old, but like a third grader should be able to understand it. All right. So yeah, we're gonna go over that today. And the other thing I want to point out too is I did switch over to futures within the past like week or two. I've been learning futures for like about a month now, but if you live in the US, you understand like what's going on as far as like forex trading. I also changed my pairs to only gold and Nas. I don't trade GU or GJ anymore like that. I just really just focus on mainly gold, to be honest. I like the way gold moves. Um but yeah, so we're gonna talk about the supply and demand. So this, like I said, this is the foundation of the strategy. Like, you need to understand that if you understand this video, you probably really won't even like you don't need help at this point. Like, I'm not gonna, like, there's gonna be other things that I'm gonna show you throughout the channel that like help me out, but like this is like literally, if you're gonna play any video, you're gonna have to replay this video over and over and over again until you get it. This video right here, the way I'm going to break it down, this is gonna be the video that you want to play over and over and over again until you understand. Okay, so let's talk about it. So we're going to talk about supply and demand. So when we're in an uptrend, we have highs, lows, highs, lows, highs, lows, and highs. Okay, that is an uptrend. When we're in an uptrend, we look for demand zones. Your demand zones are going to be in areas like this. Okay, um and we're going to talk about that in a second. Let me just go over to what a downtrend looks like. So in a downtrend, you have lows, highs, lows, highs, lows, highs, and lows. Okay? As far as supply setup, your supply setup will be right here. Okay? Now, how do you identify when there's a supply? Okay? Or a demand. So let's talk about demand first. So when we have these highs and lows, right? You got to understand what happens beforehand. So really, we might be stuck in a range or something like that, okay? Until we break out. When you break out, that is called a break of structure. How do you know you have a break of structure? So at the highest point of the market at that time, not necessarily the overall market, but as far as the trend that you're in at that moment, okay? And I'm going to show you guys the actual chart later on. When you break structure here, when you pass this point and close above, right? So we broke above and we're continuing up. That is called a break of structure. Okay. You wait for price to pull back down to the zone, and then you would look for your entries right here. This isn't marked up for this. Your supply, I mean your demand zone would be down here in this case. So really, like, we're not talking about this. We would have to talk about this high. So this is your high. We came down, right? Now you wait for a break of structure. So now we're getting that break of structure, okay? So we broke this high and we have a new break of structure. We then pull back into this zone. That is your entry zone. That is your demand. You're starting to take buys out of here and putting your stop loss either under here or under here. I'm gonna talk about, I'm gonna go over that in a second. So stay with me, bro. Look, on this end, right? So here we break structure, right? So this was your last low. You break structure right there, right? And we create a new low. Now you waiting for price to pull back into the zone, and you start to take your sells out of there. Okay? How do you know where to actually like start taking these sells? Like, how do you know where the last high is? You're looking for aggressive pushes out of your zone. So let's say the market kind of just looked like this. Oh shit, wrong thing. So like let's say it was kind of just like this, boom, and then you see how it's kind of like just choppy right now. Once you get this aggressive push, that is where you're like, okay, like there's a demand zone down here. You would wait for price to come back down, tap this area, give you some type of entry signal, and then you would go long or take your buys or whatever. Okay, so and like I said, just stick with me. I know y'all niggas got a short attention span, but I'm a break it down even deeper. All right, like this video is gonna help you. I promise you. If you just stick with me, this video is going to help you. Okay, so now when you take your buys, you're looking for buys in this area, like I said, right? And you're looking for your and this isn't a demand. This isn't a demand. You're looking for buys when you have demand zones. Demand zones are found in uptrends. Okay. You're placing your stop loss either here. Let me actually change this a little bit. You're putting your stop loss either under this low, or you can put it under this low. Same thing with a supply. You could put it under above this high or above this high, and then you're aiming for your targets below. Why is there two different places where you could put your stop loss? So number one, right? So if you put it here, you are assuming, keyword, assuming that this is going to be that low point. Okay? That doesn't mean that it was the low point, because look, if you think about it like this, right? So if this leg didn't happen yet, we're just now tapping into the demand zone, right? You understand that? So there's no telling of where price is going to go right now. As of right now, this is your most recent low. Okay? So how do you know that it's a low? Because we had a break of structure here. Once you break structure and you create a new high, you know that this is your low point. That's your most recent low point. Okay? So if you're assuming that price is making a new low, then you can place your stop loss underneath that new low, right? But if you want to be safer, you could put your stop loss underneath here, because you know for a fact that this was the most recent low at that time in the market. Okay? This is your most recent low because you had a break of structure and you created a new high. This is a resistance at this point, and this would be your support at this point. Okay? Support and resistance is like if you can't break above, you can't break below, but you get that break of structure here. So this right here was your previous support and resistance, but we then broke structure. We broke above. Okay, we closed above. We were looking for candlestick closures. We pulled back into the zone, and this was our most recent low. But now we're assuming that this is going to be the new low. Okay, so you can put your stop loss underneath here, assuming that is going to be the new low. But if you want to be safer, you know that this was the last low for a fact, so you can put your stop loss underneath there, and that is a safer stop loss. Now I will say that I take most of the time I take my trade, I put it right up underneath here. I give it a little bit of breathing room. I don't hug it this tight, but I'll give it a little breathing room because sometimes it does come down a little bit lower. But I have lost trades where I didn't put it underneath here. But it's like, it depends on how much you want to risk. And with that being said, you could have your stop loss here and be risking $100, but you could also have your stop loss down here and still be risking $100. Like, you have to understand your risk. If you don't have a plan with your risk, you're automatically like you're automatically at a disadvantage. Okay? And so then the same thing on this side. This is the supply side. So you could put your stop loss here, or you could put your stop loss here. Once again, the difference is you're assuming that this, after you broke structure, you're assuming that this is going to be the new high that's being created. So when you get your entry, you're like, okay, I'm gonna put it over above here because this is gonna be the high point. Okay, and we're not for certain that's gonna be the high point, but like I said, we're assuming, we're taking a high probability guess that this is going to be the high point. And if you're scared to put your stop loss there, or you want to be safer, you put it where you know the last high was. So if price comes up here, there's no reason why price should not continue pushing to the upside. You may get a pullback, but you're breaking structure at that point. If instead we went like this, if we came from down here, well, actually, if we didn't make this low, right, and then we just broke this high, you're assuming the next move is gonna look something like this. So you assume you're breaking structure to the upside, so you're changing structure at that point, and you're assuming that price is gonna do something like this instead, and shift it within the market. Okay, like I hope I explained that so easily, bro. Like I'm telling you, bro. If I didn't, bro, I'm sorry, bro. You just gotta understand. Like I don't know how to break it down even slower than that. But now we're gonna talk about the actual candlesticks. Okay, we're gonna talk about the candlesticks, and then we're gonna go onto the chart. Okay, so we're gonna get even deeper. All right. So look, let's say that we are in an uptrend. We're gonna talk about just supplies. I mean, just demands for right now. I'm not gonna go over both because then the video is gonna be too fucking long. So look, we're gonna assume that we're in an uptrend right now, right? And so let me change this green. Let me change this real quick. Okay, so let me just do this real quick. This is gonna make sense in a second. It's gonna look stupid right now, but it's gonna make sense in a second. And then we'll do this here, and then throw one right there. Okay, so oh, I have to do the other side too. My bad. Oh shit. Okay. So now we're gonna go orange, fucking red. Boom. Hold on. Oh yeah. All right. And then boom. 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 Actually, we're gonna just change this one to red. I'm gonna change this to red. Have a red one. Candlestick. And then we'll throw another green one right here. Oh shit. Throw another green one right here. A little wick. Then back to red. We come down. Okay. All right. So when we have price looking like this, right? I know that took a little minute for me to draw up, but it's okay. So look, we're assuming that we're in an uptrend, right? And then like price probably like did something like this beforehand, and then we like created a resistance or whatever. We stopped and chilled for a little bit. Okay, so this is how like a real chart would look. Okay, so you have all these candlesticks, right? And then this is kind of bothering me. I don't know why. All right, so you have all these candlesticks, right? Where would your supply zone come from, or your demand zone? Because if we're in the uptrend, we're looking for demands. This is your demand zone down here. Why is this your demand zone? Because that's where the aggressive pushing is coming out of. Remember how I said that earlier? How we have to come out aggressively? Okay? So look, this right here. So you're looking for that previous opposite candle. So if you're in an uptrend, it would be the previous bearish candle before the aggressive push up. And if it was a supply, you're looking for the previous um bullish candle before an aggressive push down. Okay? So this happens right before your aggressive push up. Let me change that to white. Oh wait, actually I could just turn that down. Yeah, that look good, right? That look good. Oh shoot. Let me turn this off real quick. Fuck. Okay. So when I was showing you guys the thing before, right? When I was showing you this before, so we have an uptrend, boom, 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 right? At this point in time, this is this. This would be right here. Like I know it looks a little bit like off a little bit, but like this is how the market actually looks. It's not really perfect like this. You'll see when you actually look at the chart and stuff like that. So then you're here, you pulled back, then you get an aggressive push up. This is your aggressive push up right here. Okay? So remember how we were talking about that. We then create a resistance right here. This is your resistance being created. This is your resistance being created. That's the new high point you have, right? You're waiting for that pullback into this zone. Remember I said that. You're waiting for the pullback into this zone. So this is your supply. I mean your demand. I keep saying supply. I don't know why. This is your demand zone, right? So right now in the cycle, we are here. This is it. And pay attention because this is how you get your entries. You're in this part of the cycle right now. So you have that aggressive push up. You're pulling back. Now you have your demand. Now you're looking for entries. So let's say that the next candle, the very next candle, looks like this. Let's say the very next candle looks like this. Your entry comes right here. Why does your entry come right there? Because it's a previous break of a candle. That's low-key confirming that we may go up. Not every single time, because you will take losses, but there is a high probability that once we break that previous candle, that price will continue going in the direction that we want. Let's say that the next candle instead looks like this. It looks like this instead. And we're just chilling here. And then we do something like this. Boom, made that green. Oh shit, wrong thing. Made that green. That's cool, right? Let's say it looks something like this now instead, right? Your new previous high, instead of it being here, it would come here now because you're waiting for the candle to break the previous candle high. So if price never breaks this high after tapping this zone, after tapping your demand zone, so you have to tap the demand zone. If it doesn't end up breaking this candle and you create this candle instead, then there's no entry yet. Now if we come the next candle looks like this, there's still no entry. Why? Because we still didn't break the high. We still never broke the high. So now instead of this becoming your previous candle, even though these are pretty equal, this is now your new entry candle. Okay? So now what you're doing is you're waiting for this candle right here. Boom. Once we get this break right here, you're entering. You don't have to wait for the close. You don't have to wait for the close. You're just entering right off of that candle. Okay? And so now you would take your position. I keep forgetting about this shit. You would take your position, your stop loss underneath here, and your targets is just gonna go up. You could, and now look, like I said, you could put your target here, assuming that this is going to be the low, and that we're gonna go create a new high possibly, or even equal highs. Or you could put your stop loss underneath here because you know that this was the previous low. This was the last low in the market. So you're like, okay, I could put my stop loss under here to be a little bit safer. But there's nothing wrong with putting your stop loss here. Okay? And this is the same thing if it was a demand. How do you, I think there's a way to turn, I forgot how you could turn this upside down. But if you were to turn this upside down, it would look the same but with supply. You know what I'm saying? The candles would just change color. So like if we were to flip this upside down, I just forgot how to do it. Like you could press it a certain way on the keys, but you would take sells if we're in a downtrending market. So like if this was just flipped upside down, okay, it would be the same exact entry, and you would put your stop loss either here or over here. As far as your target goes, okay, you're looking for previous structure. You can, if you wanted to, you could aim for like whatever risk to reward you want. You could aim for a little 1-to-1, or you could aim for a previous high, or you could aim for if we're in a strong trending market, you could be like, okay, I think we're gonna create a new high today, and aim for a new high. But with that being said, I will say when I aim for new highs, I look to see if we had previous structure. So if we were to like, let's say like scroll way over here or something like that, and you saw that we had candles, we had like highs over here. So like if there was like a high over here, so at some point, like if we were like coming down like this or whatever, you guys know how the market moves. If we had a high over here, right, and we if we break this one right here, then you're looking for this high at that point. Okay, so you have 3 ways that you could take targets. You could start with a little 1-to-1 if you want. You could then aim for a high, and if you think that price is gonna break that high, take it up to the next high that's way up here. Like this would be like previous history within the market. And I'm gonna show you guys on the chart next. Okay, so just remember, like I said, if you have to watch this video over and over again, because I promise you it will help you. Like it's not that bad, bro. So you take your entry, stop loss here or here, your targets, I just went over them. Okay, like that should be simple enough. I would think. How do you? Okay, so look. Now when we go into the chart, I trade on the 5-minute, but I'm gonna show you guys on the 5-minute, right? But this happens on, oh my goodness, it's because I'm not logged into my account. All right, so look, even though we saw that, I mean, even though this happens on every time frame, you could look at the 5-minute, because I mainly take my trades on the 5-minute. Like that's my entry time frame. Okay, so look, let me find a good setup. What was the setup I took earlier this week? Well, we have a good setup right here. Okay, so right here, you see, this was our previous high. Okay, well, this is our most recent high. So we have a resistance in this area. Okay, price pushes out of that area very aggressively. So we came up. Now this was our pullback. So remember, we had this and this, this and this. Okay, so this is phase 1. This is phase 2. Phase 1, phase 2. We then get aggressive pushing, aggressive bullish pressure, aggressive buying out of this area. Okay, really out of right here, because we're gonna draw up our supply. I mean our demand. Why the fuck do I keep saying fucking supply? We're talking about demands. In an uptrend, we're always we're looking for demands, and in a downtrend, we're looking for supplies. I don't know why the fuck I keep saying supply, but You guys get my point. Okay, so now that we have this aggressive pushing out of here, right? What was the last previous candle before the aggressive pushing that has a gap attached to it? Your gap is right here. And I'm gonna explain that in a second because I know I forgot to before. Like I don't remember mentioning that. So you're marking up your zone right here, okay? Now, when it comes to gaps, all a gap is like free like range, like this free traffic. This is it's there's no wicks coming into the box. So like let's say this candle right here. Well, let's say this didn't print out so high, but you had like a little wick right here, a candle with a wick. Then it takes out the probability it's a little bit lower. But as a matter of fact, I'll just draw it just so y'all can see because like I said, I want this to be simple for y'all to understand. So if the candle looked like this instead, if it looked like this instead, and we like wicked back into it before pushing up, then there is no gap. But because we have no wick coming into this box, there you have a gap. And what is a wick? A wick are these right here at the bottom of the candles and the tops of the candles. Those are wicks. Okay? These are wicks. These are wicks. These are wicks. You have, when it comes to trading, you and looking at these candlesticks, you have wicks and you have the bodies. You have the wicks and you have the bodies. The bodies are the like entire part of the candlestick. The wicks are these high and low points of that candlestick. Those are areas of like support and resistance on smaller time frames. Like we're not gonna go. I don't trade on the 1 minute. Like, but if you were to see it, like you would see like rejection from that area, from those areas. Okay. Anyways, back to the point. So we have supply. I mean, oh my gosh, why the fuck do I keep saying that shit? We have a demand in this area, right? So what did I say about the entries? So we came back to the zone, right? We pushed up aggressive. We came back. It took a little while, but we came back to the zone. Once we tapped this zone, you would have been waiting for price to break this candle. We did not break that candle. So then we created this candle, right? That's the next candle that closed. At that point, you're waiting for that candle to get broken, which it did, right? So you're taking your entry, your stop loss. You're taking your entry, your stop loss can go either right up underneath here if you want to be a little bit more aggressive, and if you want to be safer, you would put it down here. Then as far as your target, let's say we just put it here because this is where I mainly put it. You can aim for a 1-to-1 if you want to, which is this would have been a nice 1-to-1. This is 48 pips or ticks, whatever you want to call it. Okay, that's 48 ticks. But then after that, you could aim for previous highs. So this was a previous high. You could consider this a previous high, but like I would really consider like this the previous high. After that, so you could aim here, and then you could aim up here. Clearly, price didn't get all the way up here, but if you would have just not have been greedy, you could have taken profit. Like this is 140 pips or ticks, whatever you want to say. That's good enough. Okay, so that's pretty much it. Let me find a supply because I keep fucking talking about supplies for some reason. Even though I've been talking about demands this whole time. And then I gotta talk about when it's invalid, when the setup is invalid as well. I could have sworn there was a supply recently that hold on. Okay, right here. This is a trade that I actually took earlier this week. So you have a supply right here. Why is this a supply? Because remember, this candle right here pushes out aggressively, right? We then come back to the zone and we take our sells after the candle gets broken. Where does the candle get broken? We don't break this candle after tapping, but we do break this candle. Okay? So look, I want you to see. You would take your entry right here, your sell entry, and then your stop loss could go either here, and if you would have put it there, or if you would have gave it a little bit of room, you might have gotten stopped out unless you gave it a little bit more room. But right now, that would be a 70. That's 70 pips. Right now, gold is in the market where price has just been pushing. So it's like your stop loss with this strategy is probably going to be a little bit bigger than normal. I would say most of the time in like a regular market condition, my stop loss is usually between 10 and like 25-ish pips. But now with these market conditions, it's been a little bit bigger, and I don't really like that. I don't really like putting as much risk, but like the reward is also better as well, because you don't have like your 1-to-1 or 1-to-2 ends up being 100 pips or like 70 pips anyway. Okay. And actually, on this trade, I actually got stopped out when I took it, because I did put my stop loss right here, and it just tapped it and then went down. And I had a feeling too. And I actually recorded it, but um like there was something going on with my camera, so I couldn't post it. But you could have, if you would have had your stop loss up here, you would have been safe. It would have been it would have been 90 pips, but like I mean, you would have still been safe. And we ended up coming down 88, a low like 90 pips, 99 to be exact. But you probably wouldn't have caught 99 exactly. Your target would have been probably these lows, and if you felt like it was gonna drop farther, it would have been like probably somewhere down here or down here. Um, the reason why I would say that you shouldn't be trying to hold way down here is because gold is still breaking all-time highs. Like we continue to keep breaking all-time highs. This is just a pullback. So the reason why I was willing to take this was because it was a clean setup, and I just felt like I could catch something really quick. Unfortunately, I went into drawdown, got stopped out, and then price dropped off after. Like this right here was the move that I was looking for to fill this wick right here, because of on a higher time frame I had another confluence that I'm not going to talk about today. All right. But that's how you take a supply. So now, as far as when price fails, so invalid setup. This is what an invalid setup would look like right here. I just seen it. Okay, right here. This is an invalid setup right here. So you have a supply right here, right? So why is this a supply? You get aggressive pushing. That's your first like confirmation. That's good. We want that. And you're also breaking structure. So you break structure, and you pulled you have a strong aggressive push. This was news. So I thought price was just going to keep dropping down. I didn't even think it was going to come back up. But it eventually came up, but the setup became invalid anyway. Why did the setup become invalid? Because as we came back up, right? As we had our push down, and as we came back up, we ended up breaking the zone. So this zone, what I mean by that, by we broke it, we went above it, like we broke out of the zone. So technically, like if we're breaking out of zone, it looks like a shift in structure. Okay, so this is pretty much structure being shifted, but at it was a fake out at that point in time. You know what I'm saying? So like, we didn't get a candle break. That's number one. And number two was we just before even getting a candle break, we broke the zone. So like, if there's no candle break and we end up breaking the zone, the setup's invalid. You delete it. So like, as soon as these two candles happen right here, this candle and this candle, the zone is deleted. We're done. Like, pack it up. Obviously, if you would have still taken it and just like threw your stop loss somewhere, like you would have been still straight. But like, I wouldn't really recommend doing that, because especially like since we had like news and stuff like that, this could have easily just flipped back up on you and got up off you, and like you would have been packed up. Like, this was a nice zone though. Like we had this would have been a smaller stop loss. We'd have had 30 pip or less stop loss. But like I said, we broke through the zone. It is what it is. This right here is another valid setup, but I would say I usually don't really use like this many candles. This is a lot of candles to use. I usually try to look for like 1 to 2 candles like this, but this one has a wick in it. Remember how I said you want to look for aggressive pushes without the wick in it? This has a wick in it, so it's the probability of it coming up here and then dropping again is a little bit lower. But here and here, you have no wicks coming back into it. You see the difference right here? Look, the difference is right here. Okay, you see how there's no wick coming in here, but if I were to make that the box smaller like this, you have that wick right here tapping the zone already. Okay, but you still have aggressive pushing out of here. So as far as your entry is, you tap the zone, your entry, you could have gotten in right here. You could have put your stop loss right here. This probably wouldn't have been the greatest trade though. Like it's still a valid setup, but you got to follow the trend. That's why I wouldn't have even really like taken this, or I would have just aimed for a little 1-to-1, which it did hit. I would have probably just aimed for this low right here. This probably would have been like, if you were to get in, you would have aimed for this low, and that's pretty much it, because we're going counter trend. If we're going with the trend, you could aim for stuff that's a little bit higher. You could also get in aggressive if you wanted to. Like you could literally wait for a price to tap the zone and then take your entry, but then you would have to put your stop loss up here automatically. No ifs, ands, or buts about it, because price could easily continue pushing up and then giving you a break of candle like way up here. So like we could end up, if this didn't happen, we could still end up coming boom, having a candle like this, and then the price will just sit here and then break. So you can't really put your stop loss right here if you're getting in aggressively. You got to give it some room. Okay, so that is all that's literally all I have for you today. I'll be posting some more videos for y'all, but did I delete the other thing? I think I probably did. Or let me see. Did I delete it already? Yeah, I think I deleted it. So I can't really show you that other thing, but oh wait, actually I did some shit like this, all right? Fuck it. It don't matter. Just rewatch the video if you have to, bro. Like this stuff comes, and look, we have another one right here. This is literally a setup right here. Obviously the market is closed right now, but this is a setup right here. This is a demand setup. So price came right here. We broke structure, we broke minor structure here, and we broke a major structure right here. So this was like your most recent like high. You know what I'm saying? So this is a minor break of structure, and it is valid, but this is like the real break of structure where you're like, okay, like now I definitely can be looking out for demands. We have no wick coming back into the box. Okay, we have no wick coming back into the box. So price broke above. So once again, we'll do this. So we have our high. This would be your high. And then like we'll just put this here too. So we have our high. We break structure. So we break right here. Boom. We're breaking. Now we pull back into the zone. We're pulling back into the zone. If the market were open right now, you would be waiting for this candle to get broken. You would be waiting for price to break right above this candle right now, because this candle would have probably been still open. You'd be looking for this break of candle, and then you'd be getting in for a buy. Stop loss right here. Oh my goodness, did I just turn that off? Stop loss right up underneath here, or your stop loss could be like underneath these lows. I would have just kept it right here, because this is low enough to like the rest of the to this. If it breaks underneath here, we're probably gonna continue coming down at that point. So you would have been looking for an entry right here. Okay, and then as far as how this looks, is literally this right here. Boom. Now you're just waiting. You're just waiting for price to break, stop loss, Boom. That's this right here. Simple enough. Okay. So that's all I got for y'all today. I really hope that was slow enough and easy enough for y'all. I'm gonna be doing some more live trading videos. I don't think I ever actually like posted like a real like in the market. Actually, I have. I think I have. But like I'm gonna be posting more live trading videos. I probably won't do as many videos like this. But as far as like live trading videos, or if you guys DM me with questions or anything like that on Instagram, then I'll respond or comment below. Definitely comment below. Help me out in the algorithm, you know what I mean? And then we could go from there. So yeah, I just gave y'all hella free sauce. So I appreciate if y'all, you feel me? Thumbs up. All right. So with that being said, I'm out of here. Y'all have a good rest of y'all weekend. I'm probably gonna post this on Sunday. So y'all have a good night. When we get back into the market, you know what to do. You are gonna have to test this strategy out. If you're, I'm not telling you to just hop in and just start trading like this, but back test it. Or if you're looking for a strategy, back test it and just figure it out. You know what I mean? And this works on every time frame. Like you see the same thing on different time frames. So and I didn't even notice that I was on the hour just now. So like this is the hour time frame. Before I was on the 5 minute, but this is the hour. It happens on all time frames, bro. So make sure y'all just watch this video over if you have to, and then yeah, just bust it down like that. All right, smooth.